Hello and welcome to the Repeating Podcast. My name is Ayush and we have Chaitanya and an old member of the panel back again making a feature slash comeback. We have Laksh on the podcast again this week. He's come back with his new gonad-esque
I
hairstyle
swear.
as he's been
Summer
as
special.
summer special indeed.
I went backpacking in US, no, in Europe. And I found myself
Sure,
at
sure.
a monastery.
Is that what they're calling Koregaon Park now?
Mm,
Monastery.
Hey, there is one. That
Osho.
Osho ashram
Osho.
I went. The monk
When
who
now
sold his
or
Maruti.
मारुति की भी लाइफ
Hey, please. Yeah.
cool.
So,
So this week we have a cool news talk I mean cool as in maybe not cool in a
Not
business
cool.
perspective. Yeah. But
it's
it's a
actually
company
pretty
that's
hot.
yeah, pretty hot, correct. Because okay, but
You can
before we
explain a
get
bit.
into all of that, um,
Yeah.
like I
Yeah.
think the disclaimer has to be posted because we keep forgetting about that none of what we talk about in the course of this podcast is financial advice. All of it is just for education and educational purposes, entertainment only,
Or LPG advice for that.
or
Yeah. How to manage your gas.
how to manage your
Yes.
gas problems. Yes, cool. So, uh, since you mentioned LPG, let's just kick it right off from there. LPG cylinders, one of the most feared yet useful inventions in an Indian household because it is the most widely used fuel for cooking, but it's also the most widely put fear in a child's head if they're even near a gas cylinder because fat jayega, according to Indian parents.
Not
And it's
unless the
a
child is from.
no, we don't do that here. We don't do that here. But yeah,
Yes.
I mean,
So,
I think that's a pretty legitimate fear, no? Because I think back in 2015 also, there was this weird statistic that came out that more than 50,000 people die a year from LPG cylinder related incidents.
oh yeah, Abhay, no, wait, I'll tell you. So I have this. I don't know if it's called a phobia or something. So if you go through my gallery now, it's only pictures of my gas, like the stove. It's just picture of that.
Oh, I was like, why are you putting
No,
fart
before
photos? And how do you take fart photos in the first place?
infrared camera,
Infrared.
but before leaving the house, every time I have to go and click a picture of my gas stove, so that I remember that I have shut it.
Yeah, yeah. I mean, like, a lot of people forget. And then, boom.
Yeah, like my mom has that habit. Like she just keeps the stove on.
Oh, shit.
So
Yeah,
That's a horrible
that
habit
doesn't
to
happen
have.
with everybody.
Yeah, that's not a
exactly.
relatable fear.
Yeah.
Exactly. That's why I have that fear. Okay, no, I have to
Yeah,
even
that
before
makes sense.
sleeping.
तो या तो उल्टा हो गया मम्मी नहीं डरा रही
हाँ, this is the बच्चा
मुझे
डरा
उस
रहा है
तरीके से
मम्मी
डरा
को.
रही
I swear.
Exactly.
नाइस
But yeah, pretty cool. I think in general, LPG is considered like one of the most low cost fuels used for cooking. In fact, the government especially has been trying to, or had been trying to. Now we've reached 100% penetration of LPG in almost all households of the country, rural or urban. But back in 2015, it was maybe 50%. So over the course of almost a decade now, LPG has become like a huge deal, and so has the import dependence on LPG. So back in 2015, perhaps the amount of LPG we used to import would have been maybe 40% of the entire LPG consumption or demand, and now it's north of 65% of the entire import value. Sorry, of all the entire LPG value. So that automatically entails that uh, obviously LPG if we're importing it's coming through ships, and because there's only a few ports and few companies that deal with this sort of very dangerous equipment to prevent the LPG from actually fructifying even at the port itself. Uh, it's an industry that's quite specialized, an industry that's very expensive to enter, and unfortunately, because of these two reasons, one that has restricted access. But today's company is one that's broken that barrier and is a company that actually didn't even start off as someone that's even remotely involved in LPG. but was a chemical company that started back in the 80s and now has transformed into this whole liquid storage terminal manufacturer, where they basically store specialized liquids at different temperatures or different pressurized levels to ensure something known as demurrage doesn't happen, or the deterioration of that liquid. So this company, bullshit over, is called Ganesh Benzoplast and is a small cap, I think about 1500 crores market cap, and is the first and only private player to enter the LPG industry to make this whole storage and transportation mechanism so that all our Indian ports that do import LPG can face a little bit more ease, because until recently a lot of those ships used to stand in lines to offload the LPG, and now that's going to be less of an issue. So yeah, that's the company we're going to cover today.
Blasting company.
Blasting indeed. Blast off only. I think
Yeah,
share
but
price.
as a very
Yeah.
interesting fact, you mentioned
Yeah.
that it didn't start off as an LST company. It was
Yeah.
a chemical company. So company started in 1986. So that's
Yeah.
almost 40 years.
Correct.
So they made chemicals such as sodium benzonide benzoic acid, which are preservatives used in your foods and carbonated sodas such as purees and pickles and all those things. So, but the now only that the company has found itself in a balanced water, because in
Correct.
the last its journey of almost 40 years, there's been so many things happening with them. From starting from 1986 as they were started as a chemical company. After that, the LST business that you mentioned, they started it in the year 2000 with three ports in the Western India, it's Navi Mumbai, Goa, and Cochin. So, third of the all cargo in the country is from these three ports only.
Yeah.
And they also started gaining market share among the private players and started diversifying its business with that. And after an span of almost a decade, in the year 2011, the business was not doing so great. So the chemical business was consistently loss making and it needed a huge amount of basically money which came through debt. So and there were no profit in the business to make. So the new MD, the son of a founder, of course, it's India, so that's one.
Yeah,
So he
exactly.
stepped in to clear the mess. But unlike the most bad child, he wasn't the one.
Yeah.
He was a kind of who cleared the mess. He cleared the debt of in the next 6-7 years, which is by 2018. He cleared the debt of by the books using some equity shareholder funds. And the other business, which you mentioned, the profitable one, also LST one,
Yeah.
it started to pick up because it needed, I think, a little bit of capex also. So which
Yeah.
company wasn't able to do because of their loss
The
making
lack of
cap
profitability and stuff. Yeah.
and also mounting debt. So
Yeah.
first of all, he cleared the debt, and then he used shareholders' equity money or whatever
Yeah.
to further boost the LST business. And
Right.
also to differentiate between the two business, in the very next year, in the year 2019, he kind of separated the business in the subsidiary form. The LST one went into the subsidiary one, and the parent company is still doing the chemical one.
Rather the opposite. So the chemical business was offloaded onto the subsidiary, and the
Yeah,
LST
correct.
retained as the core of it.
Because of the increasing nature of that business in the whole top.
Exactly.
Yeah,
Exactly.
got it. Got it. And also to expand that business further, in the year 2020, they acquired 87% of a company to expand their logistic purpose in the business that is needed. So to shift the tank in, I guess, from 20 days to 10 days, less than 10 days.
Yeah. So actually,
Yeah.
that's an interesting point. So the 87% that they've acquired, it was of a
Hmm.
railway company that was just
Yeah.
doing cargo movement across port
Yeah.
to core cities. And
Correct.
so a cool fact that the management mentioned was, so a 10,000 sort of metric uh, volume of, let's say, a particular liquid that they have in a tank.
Metric
Uh,
ton.
yeah, I think that could be the measurement that they, I don't recall what
That's
but let's take it as
MMBTU.
Yeah, something like that. So 10,000 of that particular unit, it used to take about 400 trucks and 20 days to transport or let's say evacuate that entire liquid from the tank and then transport it to wherever they need to transport it to. And that again, because it's such a long time, they could get lesser orders. There was high risk of the liquid itself deteriorating during the transport, and because it's a truck and there's road, there's high chance of damage or like risk of, again, as we
Yeah.
said, blast, because all of these liquids were flammable because they were either chemicals or petroleum related products. So to circumvent all of that and then also reduce time, they sent it through basically I think 13 or 14 railway car wo cargo holds,
Bogies.
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 Yeah, and that cut down the time to less than 10 days from 20 days before, and it's much safer because these trains were equipped to deal with this kind of precious cargo. So it was quite a smart move from Mr. Pilani, who is the son who became the chairman. So
Of
A good
pretty
Mr.
one.
cool,
Pilani.
Mr. Pilani.
I think Maruti is also doing the similar thing. They recently
Oh,
only
really?
they started first rail line in their factory itself.
Oh,
Yeah, yeah.
to transport
I think
parts within
Even
the place
yeah, yeah.
even in Pune they have that, but the Air Force, the army has that.
within the
Haha,
base.
but
Yeah,
army.
they construct. So the railway used to go. Now they've stopped, but now they
Yeah.
have big enough cranes that take it to the railway station, not to
Yeah.
the normal railway station.
Huh.
But earlier, the train used to go into their factory only, and they used to
Right.
make it on that train, like
Oh,
assemble the
shit.
entire thing on the
Huh.
train.
That's
Because
pretty
it's very
cool.
hard to pick up a truck and move it.
Yeah,
To assemble it.
truck, tank, all of this. No,
Yeah, yeah.
Yeah.
I also
even
seen because uh,
even I
no, but
think Shirke or someone, Shirke or Kalyani or Bharat Forge,
Bharat Forge
either
is
one.
Kalyani.
Bharat Forge does, yeah.
Yeah, they have in Pune only over here behind,
Yeah.
and I
Those,
think
I mean,
there's a
those kind of
train that
businesses
goes
need it, I
inside.
think, right? For the same reasons that you all mentioned. These equipments
Yeah,
are either too heavy or too dangerous
to
to transport via
offload and
road.
onload.
Yeah.
Yeah,
So railway was the only logical option.
But coming
So
back to
yeah,
Ganesh,
yeah.
yeah. So they also Ganesh Benzoplast.
Benz, yeah,
oh
not
my
oh
friend
God.
Ganesha.
Yeah,
So after establishing a new focus on the LST business, which is apparently very high margin, like
yeah,
50% EBITDA margin compared to the 10% in the chemical business.
right.
So after doing that, they are now entering to
That's a
the
huge
yeah,
difference, by the way. Like, holy shit.
consolidated basis can only take that, not sure of
Unfortunately,
30%.
consolidated basis because of how like
Yeah,
drag down of a business the chemicals is, the
yeah.
blended margins goes down to as much as 22-25%, which is crazy.
Mhm. One business is doing 50%, but
Yeah,
because
and the
of the
other
other
is
one,
doing less
because
than 10. Yeah. So I think that's why the whole like hiving off of the chemical business into the subsidiary happened,
ah,
so that the standalone entity at least can look attractive and profitable,
mhm.
whereas consolidated basis pay anyway until they demerge the complete. So I think that is something we'll get into later. But why they did the whole subsidiary hiving off is for this reason, because the liquid storage terminal, or as you mentioned, LST, was so highly profitable and was doing so well, but because of the chemical business being basically so shitty, even though they're market leaders in this, it's just not a good business to be
It's just the
in
nature of the
general.
business that is there.
Nature of the, exactly, precisely.
But exactly to address the same point, they are also entering into
Yeah,
the new, even more profitable space, which is the
yeah,
LPG storage and
yeah,
transportation industry.
yeah. Which is how like what we spoke about
Yeah,
in the initial part of the podcast. Yeah,
the plastic ballasts.
blasting. But yeah, it's a
So,
pretty cool industry that they're entering in fact. So it's actually based off of whatever we've explained about the liquid storage terminals. Like their expertise in that segment is what has resulted in them even getting as close to the LPG industry as they have, because the way they've created their tanks and the way they've created their terminals at the three ports you mentioned across Western India, they're so well thought out and chosen. Because so JNPT, which is in Navi Mumbai, Murmugao in Goa, and I think Cochin in Kerala. All three of these ports as again you mentioned, a third of the entire containerized cargo, but they're also the highest growing month-on-month basis pay ports in the country. So they identified these opportunities way back in the early 2000s and have retained those relationships with these port authorities, which is, I think, difficult to retain and
Yeah.
then also scale in terms of market leadership. So because of all of that, they've secured, I think first step was securing the land to make such an LPG terminal, which
Yeah.
they've done by creating a 25-year long lease with JNPT in Navi Mumbai, which is difficult to achieve in itself. And that basically secures the fact that this LPG business has that much of a longevity minimum. Now, whether they renew that or not is up to a 20 whatever problem, 2050 issue. But yeah, that was the first step. And then the second step, which came in very quickly after, and I think it's been in the works since 2022, is two large companies in the entire LPG space. So one is this company called BW LPG. It's an Oslo-based, basically they have ships that transport LPG from one country to the other. And they are one of the largest in the world, or the largest in the world, in terms of number of ships that they operate and the just quantum of LPG they transport across the globe. So they've been wanting to enter India for a while because among the top 10 busiest LPG ports of the country, five of them are in India.
Of the
Among
world,
which,
5,000.
exactly, yeah. So among which the nearest ones to JNPT are Mumbai, main wala Mumbai port, and Kandla in Gujarat.
Kandla.
Kandla, yes. So those are the heaviest in terms of load for LPG import. Yeah. So JNPT falls quite close to both of them, and in an attempt to try and uh, take off the load. So choosing that port in itself was a great decision. So BW comes in and decides, okay, they want to invest a couple of tens of millions of dollars into India's LPG infrastructure because they see LPG consumption and at some point the entire infrastructure space of LPG becoming a big deal in India years down the line. So they entered in 2022, decided to make deals, and I think one of the major ones that have materialized is the one that they have with Ganesh Benzoplast. So you've got the importers coming in with their carriers or their ships. You've got Ganesh setting up the infrastructure for terminals, storage, logistics for transport of LPG out of the port. And then they needed obviously someone to help with the cylinder. There is where Confidence Petroleum comes in, which is an Indian-based company and is the largest private player in the actual LPG cylinders that reach the household or commercial purpose. So these three companies formed a joint venture, hence why this is such a big deal. And this entire project is going to materialize, I think, by sometime in 2026, April or March. So it's a good 2 years away, of course. But in the process of that, there's going to be a lot of good changes happening for the company. And it might not be the only project that they sign because JNPT is one of them. They have two other ports that are the fastest growing in the country, and India needs more ports as well to
Correct.
set up this infrastructure. So it could just be like a Pandora's box in a good way, where it opens up more opportunities for Ganesh and for this entire joint venture. Thoughts? Any thoughts? Laksh has been awfully quiet.
No, I'm trying to understand something.
Yeah. But yeah, it's quite I mean, it's a complex business
But
to be also. Yeah, go
okay,
ahead.
1 second.
Yeah.
The margins for the LPG is how much?
So that's a great question because
Let's say
so yeah. So we established chemicals business as least margins at 7 to
Yeah,
ten
that's
less
percent.
than
10%. Yeah.
10%.
LST is about
LST
50%.
50%,
Yeah.
which is
Hmm.
And this
80.
on a good day is 75 to 80%
Yeah.
80% LPG.
LPG.
Yeah.
And
So to
but
give
then
you
the
more context, yeah, go ahead. So the
fuel
cost to set
cost
up the actual tanker will be
is higher. No, it's the same.
it's almost like mota moti. It will be a couple of
But
lakhs.
leasing out is higher.
Yeah, leasing out is much higher. So the difference in the lease rate. So I mean, again, I think we didn't set this in context. So the whole liquid storage terminal business works is Ganesh makes the storage tanks, and these tanks form a system which that number of tankers together form a terminal. So they lease out different tanks to different companies based on what liquid they have and what requirements they have, whether they need cryogenesis to freeze the
Hmm.
liquid for a long period of time or whatever. So that obviously they lease it out to these companies. They don't sell it, and the same system is what's going to happen with LPG. But like you mentioned, so they're expecting. So it's based on the kiloliters of liquid that they store in these terminals. So for LPG, it's about 1,200 to 1,500 rupees per kiloliter of liquid stored.
Okay.
So that's automatically a 50 to 70% increase as opposed to the normal liquid storage tanks that they have. So
So
for
basically, all are just positives in this, like better
oh yeah,
margins, better
better
same
margins,
cost.
yeah, almost same cost. I mean, this is a little cost intensive initially, I guess, because the
Yeah,
entire
to set
terminal
up.
costs a lot. Yeah, like the more than the tanks itself, it's the
Hmm.
infrastructure in and around it
Yeah.
that's the dicey. So
But then
the
again, there
entire
are higher this.
yeah higher
But then
realizations.
higher oh.
Yeah. So it's worth it. Like it's definitely worth it. And plus, like they're the only people doing it as of now,
So
and
they
they're yeah. No, go
so
ahead.
they make these plants and then they deliver it to wherever, like whoever it is required to,
Wants to do that.
Yeah.
and then they transport LPG also as well.
Now they'll start transporting LPG as well.
So they are making the storage plants for LPG as well as transporting LPG to the companies.
That's why they need
Oh.
help from people like BW and Confidence Petroleum
Huh.
That's
because
why I
they
think the
don't understand.
railway acquisition as well.
Yeah, I mean that was like a very preemptive move that they made
Preemptive.
in
Yeah.
2020
It's a well
itself.
thought plan.
Very well thought of. Yeah.
Oh.
But again, coming back to what you said, right? The cost that's associated. So this
Wow.
entire terminal is going to take up about 600 crores. So it's not less.
Yeah.
It's not less.
And company is worth 1,500 crore, right? Market cap.
Yeah, market cap. Yeah. So they're spending
Well,
on 600 crores. All
Yeah.
obviously it
Almost
won't be entirely like cash
in the
or
1 year.
yeah, and it
yeah.
won't exactly. It'll be, but it won't be phase out as well because if it launches in one shot. So the 600 crores
And
will also
keep
be spent
generating revenue for next so many
for
years.
then. Yeah, exactly. So 600 crores. Now details for that, 100 crores or 150 is by equity. So there's a lot of funds that have started investing. BW and Confidence have put in money.
Hmm.
Promoters have put in money, etc. So that's about 150 there out of the 600, and the rest is going to be debt. Now that's what is freaking people out a little bit because they've
Yeah.
just gotten off the entire
Past
tech
experience
fueled
of that.
past experience. Yeah, but I think what people are secure in the fact is Pilani knows how to deal with debt now. So
He's a good
he's
boy.
given, yeah, he's a good boy. So he's given everyone enough assurance to let them know that while we're going to be shelling out about 450 crores in terms of debt, it will be structured in a way that the payment system will be so seamless because the amount of revenue that's coming in, 80% the
Yeah.
margin. But once this plant kicks off, they're expecting a minimum 200 crores revenue a year. And that is at a stable, that is if the rental rate remains stable. Now,
If
in
it
an industry
increases,
like
then yeah.
it will increase. So the minimum increase per year that they've accounted for is about a 5 to 7% yearly increase, regardless of what happens. Even if the whole LPG market crashes, but LPG is still required, they will still hike the price of the lease rentals lease rates by around 5 to 8%. And on the higher end, that'll be 15, 16, depending on how the demand
Business
works. Yeah. So they're going to pay this off in no time.
if everything goes according to plan.
Yeah, which it should. Like, it doesn't look. I
Yeah.
mean, anything can happen. Obviously, you're right.
Of course.
But like
But the
the
debt
math
to
works out.
equity still,
Yeah,
yeah,
debt to equity is extremely low right now. In fact, so
right
Because they
after,
now.
haven't
But after
taken
that,
that. Yeah.
so
even
after
after they take debt, it
even
comes
then
up to
it'll be
point
sub.
two
Huh. I
this
mean, like that's
point
still
two
so low.
x. Yeah,
and right now it's 0.03x. So
3x, yeah,
it's crazy.
0.22x. So then, yeah, that's not as much as a trigger, but a lot of people
Not at
would
not at
prefer
all,
it
in fact, because I mean
to
it only
be
takes
lower
a
than point 0.1 or something. Point 0.1,
no, no. I mean the ideal what I mean according to
Less
whatever
than one, so it's good.
less than one is okay, yeah.
Yeah.
And for this company, they've hit 3 and
yeah,
4
of
and all.
course, but
So in case point
yeah,
one is point two is like peanuts.
yeah, exactly. So
So
worst case
it's
scenario also, it doesn't
worst
harm the
case scenario
company
also
itself.
exactly precisely, and it doesn't tarnish the valuation either. Like if you're at a
Yeah,
0.2x debt to equity, people are scared. It
and that
won't.
too after taking 450, that like after
Yeah, I
taking
mean that's a lot of money.
75% of their entire expense as debt.
Exactly. Yeah, which is
So
I
that's
mean
not
that's a
bad
huge
at all.
amount. Correct.
Yeah.
And in fact, this is not the only. So this is the big 600 crore, may say 450. They're doing debt, but in general, they're
Mm.
expanding the whole liquid storage terminal business to account for more petroleum-based products
Mm.
because they've nailed that segment now. So LPG is one, but there'll be
Yeah.
other petroleum derivatives that now have the expertise to store. Usme bhi
Store
the
and
margins
transport as well, or just
exactly store and no both. So it's a combined offering. But just the storage, if we talk about, that's where
mm.
like we talk like we can quantify the margins. There also for these like new upgraded tanks that they're going to do capex for, which again they're doing with a 70-30 split between debt and equity. But
Yeah.
that'll be smaller amounts of maybe 20 crores, 30 crores. But those also margins are 70-80%. So this is all
Mm.
very fruitful usage of capital that they've somehow nailed after not being able to understand how capital works back in 2012, 2011.
Using
So
capital very efficient.
very efficiently. Like again, if we had to quantify that, ROC was 9 or 8% back before Mr. Pilani joined in as the chairman and MD, and after his turnaround and after this whole identification of this segment being lucrative, it's north of 21-22% now, which is crazy growth in a decade.
And how much? How much in like, so this will start by 26, if I'm not
Yeah,
wrong.
they're expecting Q1 FY26.
Revenues to come in.
Yeah. And so the best part about this
And
is,
uh,
yeah, go ahead.
no, how much revenue do they expect, like in the after, or like in the first year itself, or in the next
First year
5 years?
itself, straight up 200 crores. So out of the
And
200
that
crores,
is,
at least 50% will come in just from BW and Confidence Petroleum. That's the whole point of the JV. They want to use their own infrastructure that they help setting up. So majority volumes, or at least 50-50, let's split. It will come directly. So that's guaranteed 100 crores odd coming in every year, no matter what, because it's part of the deal that they've signed in the joint venture. They're
okay.
guaranteeing that X amount of kiloliters of LPG will be stored at your facilities on a monthly or quarterly or yearly basis, and this much revenue will come no matter what. And obviously, I'm sure it'll be at a fixed lease rate or a very minimal
Hmm.
flux of the lease rate that they've probably locked in for the 25-year period. But still, guaranteed revenue that's almost a third of their entire year's revenue is a sweet deal.
Right now, how
They
much
make
revenue are they doing?
they make about 400-ish crores, 400, 450.
Oh,
200 crores
mm,
though will come from one terminal, one LPG terminal. Now, if they set up in, let's say, other ports which they have
so one
access to,
LPG, like if one JNPT is one terminal, basically, like that.
yeah, like that's one hub. Yeah, so that entire hub is going to
Okay.
generate 200 crores of revenue, at least.
Okay. Hmm.
Yeah, so it's
And then
crazy.
it keeps on increasing and by when
It's
are they
part of
going
the
to set
business.
up all of these?
As in, like when will
Like,
it start functioning?
yeah, all of them.
That's what.
You said there are three,
So
no?
it's all going to be in no. So they have three ports. Now they're
Hmm.
trying to see whether they can set it up at the other two, but JNPT is confirmed.
Okay. So
Now whether
26th, it'll be set up and
26th, this one will be
revenues
started. Yeah.
will
Now the only
reflect.
problem with this is now this is something that of course it's a little bit of a risk. Is Goa they may not be able to do it for the foreseeable future because there's a bit of a ban on these kind of things happening at the port at Goa. So they set up a mining ban a long time ago, and then that is like filtered down into petroleum related products. So setting
Oh.
up an LPG infrastructure, so that one port will be blacklisted
But
from
that's just
LPG import
storage,
export,
no? It's not
but it will be accepted, right?
generation. Like,
Correct.
it's
But
not
they don't want to
generation.
accept that kind of payload at all. some kind of
Environmental concerns.
could be, or like, I'm actually haven't checked
They
into it.
haven't given reason. So the government
The management didn't, because it's still something that's, so I think this is like a decade long issue
it's
that's
a
been going
developing
on.
story, I think.
Yeah. So I mean, it's unlikely that Goa will allow it, but Cochin is an interesting one because they're actually opening like a new section of the Cochin port to facilitate the LPG thing.
This
So if
kind of.
yeah,
No.
so if Ganesh gets that order, then nothing like it.
And any government triggers?
Not as such, because I mean, if they had, I mean, it obviously everything is in hindsight, but if they had started this entire thing back in 2015, then this stock would be a mid cap by now. Because 2015 is when the penetration of LPG as a concept started from the government
Yeah,
push.
from the
All the
government.
Ujjwala Yojana and all those things.
Precisely.
That's why I was like, yeah.
So if they
But
had
it has
started
happened
then,
now. 100%
yeah, it's
over.
over. So that trigger is
That's
completely gone. Yeah. So now it's just about the government trigger being they are going to open access to LPG imports in more ports in India.
okay.
They're probably going to open more ports and set up infrastructure as a whole new start of ports for this
And
purpose.
and this company has like a first mover advantage because they are like the best
At least
that
among
do it.
private, because they're the best that's doing it right now. Yeah. Everyone else is Hindustan Petroleum, Indian Oil,
Bharat
Bharat
Petroleum.
Petroleum. So
IOCL.
Yeah.
exactly. So all PSUs, though, obviously will have first preference. But if they're able to establish themselves as someone who's good at doing this,
Yeah.
then there's nothing to prevent a PPP, private public partnership. So yeah, a lot of cool shit happening in the LPG space for the company. Yeah. So, but I guess like all theses that we cover, uh, we can't rely on just one story maybe panning out or not. So
Panning
there's a lot of other things happening in the company as well. And if Laksh can throw a little light on what else is happening on the periphery of Ganesh Benzoblast.
It talks about a demerger.
Yeah. So like we mentioned earlier on, and I think Chaitanya spoke about how the chemical business has been transferred to a subsidiary, but the
And that's
initial
gonna be like,
yeah,
yeah, if they get two listed, like if they
yeah,
turn up to be two listed, separate listed entities, there's immense value creation for like investors.
true, because like while right now the blended entity ka let's say EV EBITDA multiples are somewhere around 8 times. If it's split, then automatically the liquid storage business gets a 12 times EV EBITDA just off of listing, while the chemical business, which has gotten zero valuations from investors, will at least get a 5 times EV/EBITDA because they finally looked at separately, dealt with separately, won't have a blended or consolidated effect on each other's profitability. So it's not like one is like before we could see the chemical business being propped up by the LST business or the LST business being dragged down by the chemical business. But if they listed separately as two different companies, then that issue only doesn't exist.
What's the current EBITDA levels?
Like
If
number
we
EBITDA or percentage?
percentage.
EBITDA margins you're talking about, right?
Yeah, yeah, margin.
21, 22 maybe? That's the problem. That's the whole problem. Because well,
For the
LST,
21% also, it is holding back. The chemical is holding back LPG and
yeah.
LST.
So if the
Oh,
chemical business didn't exist, LST is making 50% plus. That's crazy profitability. That's the whole
yeah.
reason why the company on a consolidated level also, while the chemical business was making losses well up until the entry of Mr. Pilani, on a consolidated basis, it was net zero. So it was neither profit nor loss for a couple of years.
Break even.
Yeah, that is solely because the LST business was keeping things afloat. Otherwise, they'd been like you could see a negative, negative, negative. Like they didn't pay tax for so many years because profit ही नहीं था.
Profit, huh?
अच्छा carry forward किया होगा tax.
Yeah, I mean that's okay. But as long as they have profits now, and 55 crores of PAT from zero or negative is no small feat. But yeah,
Yeah.
so yeah, demerger is one story. The only problem with this whole thing is there's this high court case that's stuck with them for like a couple of years now. So the issue was that there was a company called Morgan Securities. They used to hold X% of Ganesh Benzoplast, and they had a custodian. I think they themselves, the company was holding those shares for Morgan's Securities. But in an event or in the process of restructuring the debt and trying to pay off creditors, uh, the company sold off those pledged shares of Morgan Securities without their consent. At least that's what the notion is, and that's what the allegation is. So because of that, that amount was maybe 3 crores back in when this case was filed, so 5, 6, 7 years back. And Morgan Securities has filed for a case in the High Court to obviously retrieve that amount, but at an interest rate of guess how much? And this is compounded
90%.
over
40%.
no. But let's say compounded over month on month. It's month on month,
So
three
like if
percent
10%, 3% month on month.
every for 7 years at least now. So that
Wait,
three
now
crores or
let's
2 crores or
wait,
whatever,
wait, wait.
that math
Let's
will
do
take too long.
it. No, how?
B.Ed,
No, it's
B.Ed,
easy. Wait.
Do CFA level 2 guys, come
B.Ed
on.
How
2 plus
many? 5 years. 5 years, no?
Let's assume it's 5 years. It
Okay,
starts at 3
60
crores, 3%
and
monthly interest,
how
compounded.
much? His wait, how much percentage?
3%.
5 years. So that is
Oh,
17 crores now.
Yeah. It's not, it's almost 17, 18. Yeah, correct.
17.67%.
Which is crazy. And that's what Ganesh Ventureplast is contending in a high
but
court,
of course
saying
they're
that
asking it. They won't get. They probably
they
won't
won't
get
get,
that.
they definitely
But
won't get that much because it's an outrageous ask. No one
huh.
has precedent at high court as of now, at least,
Hmm.
to demand such a high amount of interest. So what they're probably going to do over the next 5 years is bring that number down a little bit and settle it finally. After which, finally, the demerger can happen, and then we'll see this supposed value unlocking. But unfortunately, this story has also been going on for the previous 5 years. So everyone's been
But
thinking
after the
demerger has
business
already
will
come.
scale up, the profit will scale up. This
Yeah.
small amount of 17 crore won't make that
Oh
much.
yeah. Right now,
Yeah.
it's a huge amount
Right now,
because of
yeah,
the
because of the lower scale of the
correct.
business. Yeah,
Exactly.
hopefully, yeah,
Yeah. So then they might just be able to pay off Morgan Securities.
yeah.
So while they did make a mistake, according to the case
Hmm.
allegations, what's also wrong is Morgan Securities asking for such an atrocious amount of interest. So
Bro,
that's
that's
what
like
the to and fro is happening. Yeah, it's crazy. It's crazy. It's a lot.
3%. It's
Yeah,
like
अभी वही पे
42.5% per annum.
yeah.
Yeah.
See,
It's
I
crazy.
asked
It's
ना, I
crazy.
told you 50% almost. वो एबिटा पे देखा ना उन्होंने उस बिजनेस का
Exactly.
एबिटा है तो ले लो.
क्या क्या?
Yeah. They
The
knew
EBITDA
that the
was
company is
one of
doing
the
well
business was
finally.
50% ना. So they
Uh,
tried
They
42
tried
ले
their
लो.
hand.
हाँ,
What balls they're gonna get? No chance. It's too much. It's too much.
42.5%. Who compounds, bro?
Yeah. It's crazy. So that's what, like, it's probably not going to hold up, which is why there's now hope that this case will finally get resolved over the next 5 years. But I mean, that's very contingent to a lot of variables. So it's not something we can bank on. But what we can bank on is the fact that, as we mentioned already, expansions happening. So they're entering these whole petroleum products in general. So those storage tanks, higher margin, same cost, vagera, increased profitability and capacity utilizations at the other two plants, at the other two ports. So Goa, because of the whole mining ban thing, it's capped at about 80%, and they're at 70% utilization right now. So there's less incremental growth because they can't bring in those cooler, value-added, higher realization products through the Goa port. But Cochin port is seemingly a very cool spot to be in, and they're also at like a 70-80% capacity utilization. So that incremental 20% could make a huge difference. And JNPT is already at 100%. So there's only newer things they can do, like the LPG thing, to add value to that port. It's a good thing that majority of their liquid storage terminal capacity is also at JNPT, about 80-85%.
And Goa is what then? Chemicals mostly. Oh, no.
It'll be chemicals, it'll be food. So a lot of like, let's say for example, Pidilite ka Fevicol ka concentrate, if it's being
Hmm.
imported,
Yeah.
that raw material is stored at one of those ports. Asian
Okay.
paints, paint related chemicals stored at these ports. Jubilant Life Sciences, they experiment a lot of preservatives in foods. So
Storage
that's dual
facility listed out to other.
leased out to all these companies. Yeah, and for all the food related ones, it's a blended opportunity because they can also ship their sodium benzoate and benzoic acid products there to create like a double opportunity. So yeah, companies grown really slowly, like a 5% revenue CAGR over 10 years, which is peanuts. But now they're expecting 3x revenue and profits from here till FY27 because of this
New business
newfound.
vertical.
Yeah, a lot of cool stuff happening for a company that most
अच्छा
people
प्रसाद
don't.
मिल सकता है गणेश जी का.
हाँ काफी उनको भी और investors को भी if
हाँ,
they choose to consider this.
participate in the आरती
Yeah,
of Ganesh.
exactly. So
What
yeah,
a feel.
pretty cool company. And yeah, if you all want a little more detail, a little more research, and want to know more about companies like this in more detail than we can give you on a podcast, obviously, then you can reach out to us on repeating.com, and we do a lot of these portfolio reviews. We give you research that's very targeted to what you want from us. So head over to our website, link in the description, vagera, vagera. Check it out. It's a lot more fun than
Like,
it
share,
used to be.
subscribe.
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 So yeah, thank you for watching. 41 minutes of this podcast. I'm sure none of you all have reached here, but if you have, thank you. We will
Thank
send you cool t-shirt if you reach out to us on Instagram or Twitter or whatever.
you.
And stay tuned for the next episode next week where we cover yet another cool sector, cool company, or cool event that's happening in the stock market. And until then, thank you so much for watching. And that's a wrap.